Hello traders, welcome to my screen view. In this short video today, I'll show you the top 3 reversal strategies for day trading in the financial market. We all know day trading is a type of trading in which all positions are intended to be exited on the day of entry. Therefore, for a day trader to be profitable at the end of the day, he or she must have effective and consistent day trading strategies. There are lots of day trading strategies, but in this short video, you will learn how to apply the top 3 reversal strategies for day traders. So what's a reversal in price movement? A reversal in price is when the direction of an existing trend changed to an opposite direction. As a trader, how can we detect these changes in price movement in the market so we can take advantage of them? These are the top 3 reversal strategies to spot this reversal at an early stage, and they are 1. The Trendline Break, 2. The Key Level Rejection, and 3. Trend Indicator Crossover. One of the most effective reversal trading strategies is the Trendline Break. To apply the Trendline Break strategy, we need to look out for a trending bullish or bearish market. As we can see on this trading chart here, the trend was on a strong bullish move. We can see how price respected this ascending trend line from the swing low here to the high-low swing here. We can see whenever price tests this trend line, there's always a bullish rejection to the upside. But right here, we can see how the trend line was broken with a decisive bearish candlestick. It's best not to take the first breakout. Instead, patiently watch out for a retest of the point of trendline break to see if it would act as a new level of resistance for price. Also, take note of the last swing that led into this bearish breakout. It was a low-high swing to the last high-high swing here. This low-high swing thus signaled weakness in the bullish momentum to extend the price upward. Also, take note of the bearish pin bar, which was rejected below the last high-low swing in this bullish trend move here. Stop loss can be placed above the high of the revalidation of a bearish breakout here. Entry at the low of the bearish pin bar here. And we can target 2 or 3 risk-reward ratios in this setup. We can see how the bearish trend extended downward. Here's another good example of a trendline break in a bearish trend. We can see, after the trendline bullish breakout, price made a bearish pullback to carve a high-low swing to the last double bottom lows here. Price later closed above the last low highs, which is the neckline of this double bottom here. The strong bullish close of price above this level signaled a potential reversal in the previous bearish rally into a bullish trend. Stop loss can be placed at this swing low of retest, and entry at the head-shaped bullish candlestick here. We can target 2 or 3 risk-reward ratios in this type of setup. Now let's see how the key level bounce reversal works. We can see in this strong bullish move here, when price got to this level, there was a bearish rejection. Price retested for the second time, and there was another bearish rejection. This second rejection makes this level a potential resistance level for price. On the third retest, we can see price carved a bearish engulfing bar at this same level of rejection. This is a key level rejection reversal trading setup. Stop loss would have to be placed above the high of the bearish engulfing bar. Entry at some tick below the bearish engulfing bar. We can see how these key level rejection setups led to a bearish reversal in this bullish trend medium. This setup can also occur at the bottom of a bearish trend, thereby acting as a bullish key level rejection reversal trading setup. The third top 3 reversal trading strategy is the Trend Indicator Crossover Reversal Setup. Examples of trends following indicators are EMA, RSI, OBV, Mark D, and others. I will show you how to use the exponential moving averages to spot the reversal of a trend in the market. The 10 and 20 period settings are suitable for the day trading strategy, while higher periods can be used for long-term trading setups. We can see on this bullish trend, price was trading above the EMA indicator. At this price level, we can see how the EMA 10 period, which is the blue line, crossed below the EMA 20, which is the red line. This crossover below the EMA 20 period signaled a change of trend from the bullish phase into a bearish phase. We can see how the trend was reversed into a bearish rally. Likewise, in a bearish rally, the crossover of the blue line above the red line usually signals a reversal of the bearish trend into a bullish trend. This indicator works best in a trending market. Make sure you master these easy top 3 reversal strategies for day trading in the financial market before proceeding to the other reversal trading strategies.